Sorry. That's funny that I was ignoring you. Anyway, I was just doing the work I had to do, just getting the things out of the way that had to be got out of the way. Oh, isn't it nice? Isn't it nice to tune in to a chart and see that we came up to a fib extension? Then whenever we retraced, we didn't actually knock out the 1618. Ooh, but only if we stay above the parabolic SAR, looking to remain above the $21 on this crypto. Wouldn't it be nice for everybody that likes to look head and shoulders? It's always worth remembering that there's a 60% chance that you won't actually manage to do the move. When we saw the prices extending past the right hand shoulder, everything went crazy and it moved up a nice solid 22%. Then we retraced back down to the same area. Wasn't that a surprise that we found support at the previous highs? Then we went on up towards the top side, and we are still looking at the 3.414 at $30. But that's enough singing though. How about we actually do the technical analysis on this thing? And thank you so much for everybody who tunes into these episodes, by the way, all the time and hits likes and subscribes and all the rest of it. Let's see if we can discover anything along the way. Oops. Okay, we're not made it there yet though. No withdrawals back down the way. Not willing to call that bearish divergence. This time frame, 12-hour time frame, needs to be amortize these into the one instead. This is a bit wedgy. Same sort of chat as what we're looking at with regards to, you know, the likes of Link and Tezos and whatever else. This is the potential for this to be wedgy. Then of course we could move up, but what we're going to be looking at, well, we just move the average true range. This is when you start to see these sort of stair-stepping type moves and things, and you could be looking up beyond even the 3.4 and the 4.414. In fact, I've dropped that in completely the wrong place. You could be looking up to the 4. Oh, that lines up perfectly. In fact, the measured move coming in there at $35. That's going to have to be your third take profit target with the current moves on this one. Sort of let me just do what I've been doing during this show and drag this in towards the top side. Whoops, that's a bit narrow on it. There's target number 2, I suppose, really technically, since we're already at target 1, let's be honest. There's target 2 though, really, thereafter. And then I'm not going to draw in anything higher because that's already crazy, looking at 35 up from having been at 25, or indeed looking at 30 from 25 as well. They're both, you know, more than 20% moves towards the top side, so that's fair enough. Let's not get too greedy on it, but we can always remember as well that there are the potential for pullbacks along the way. Getting rid of this here and drawing in from that same low up the way. Oops, I always do that. Well, I don't always do it. I do it frequently enough though to annoy me. Up towards the top sides, we want to stay above $22 essentially. 21.93 is what that says there. Fair enough. Pattern wise, of course, as well, this is what I was talking about there, and we can see this having happened. By the way, for people who are looking at these coins recently and looking at the structure and saying this is an odd structure where you've had a movement up the way and a movement down the way, where you've got a low here which is following on from having had a higher high. Another way of looking at this sort of thing is simply to say, well, if that's that way up the way and this is this way down the way, and then we of course encapsulate this side over here, that's how you find your diamond tops, by the way. And then the measured move off the back of a diamond top is just the flagpole essentially. So let's compare that to the measured move that we had for the other pattern and see if there's any overlap in terms of how these things work. It's a little bit less girthy than the other one, not quite as much of a move. It does encapsulate the full move up the way, you know, the full thing, but maybe this would be more realistic in terms of your upside target, and that lines up. So you're getting a number of confluence points, you know, $35 making a perfect target towards the top side. Now what we want is obviously to stay in trades and not get too, like, you know, washed out. Where do you want to drop out at? Well, $20 would be a big problem to go down to, but of course not the end of the world, so long as the jet planes, the red jet planes, don't start, of course, hammering us towards the downside by that stage. Of course, I'll just get rid of that one. So we're still looking for support to come in at around about $21, I suppose, really 20 to 21. But the parabolic SAR has you on the 24-hour time frame, staying in your position until 17. Let's look at it in a lower time frame and get a bit more realistic on it and say that actually, in terms of where we've come recently, we've actually seen the parabolic SAR flip. So the chances of us breaking out of this at the minute, while they remain as they ever do, decent, we can acknowledge that these two highs are coming with a degree of bearish divergence, and maybe it's fair to look down towards that $20 to $21, $20.40 for instance, as a decent entry if you're wanting to take a move off the back of it. That gives you a number of different ways of approaching your trading in this zone. For instance, let's just assume that you're not planning on doing any shorts and you just wait for decent entries instead. Then a nice move up towards the top end of that and managing your risk with a sort of decent 5-to-1 risk to reward actually sees you not having to stop out of any trades until you see the prices drop down to the 19.6 area. That's a nice one. I mean, it really is not breaking the bank here by saying that I'll get in at around about 20.50, I'll stop at around about 19.50, and I'll take profit at around about 24.90. That's your first one. Then of course, if you're to be super absolutely crazy on it, and lots of people would like to do this, so why not, what would a 5-to-1 be to actually take us up towards that measured move? What sort of tolerance would you need to be having if you're going to be crazy and trading it through the range? Now this boils down to the whole concept I often talk about, how it's your job to buy and sell risk. So let me just kind of use this as an example and show you that there's the three concepts that people have. Now this middle one is the one that everybody kind of gravitates towards whenever they're looking at patterns. Okay, this is what they gravitate towards, and that's what you'll find if you watch like the likes of the Moon, etc. as well, because they don't really talk about trading within the range. They talk about trying to bust outside of the move, having taken it from within your support area. This is inadvisable for your long-term longevity as a trader overall. But then again, I'm not a financial advisor, none of this is financial advice, so by all means crack on and take that if you want to. What actually makes a lot of sense though, as well, is if you were to be looking up towards one of these areas, let's just go for the bigger measured move, or let's just drag up towards where that measuring stick is, and then say that you could do it in three ways, in a couple of stages, 1, 2 and 3, where you'd actually be managing your risk with saying that if we take out the previous lows in about this consolidation phase, then we are obviously not doing well. Why would that make a good deal of sense in terms of anything else? Well, you'd have one low there, you'd have two lows there, then by this stage you'd have three lows, and it'd be unrealistic for you to be looking to try and buy the risk between the prices of 22 to 23 without acknowledging the full-on possibility of a 10% withdrawal thereafter. Okay, that's your TA on that one. Shall we look at anything else? I don't know. I mean, that's like drop the mic, right? Isn't it? I don't know. I think it is. The divergence is there to be seen, like I pointed out already. Of course, on the bigger time frames, then you're seeing this kind of potential sort of weirdo MACD head and shoulders. I don't really buy into them too much. I would like to point out then, of course, the so-called hidden bullish divergence in here at this point over here, worth being aware of, I suppose, overall, and looking at this thing and saying, well, overall, while we have this downward sloping bearish divergence, that actually what it does is it means that we've got a good deal of room towards the top side should we break what is otherwise a downward sloping resistance line, and that's what it would be to circumnavigate bearish divergence beyond on the longer term. And that's when you get that counterintuitive viewpoint where I say to people so often that so like counterintuitively, what we need to see happen is yada yada yada, so that we don't have this actually form as bearish divergence. Well, another analogy for the same thing is, of course, to talk about that as terms of a diagonal sloping support and resistance line. If you're looking at things in terms of the DMI, you can see that we have, of course, got this upward movement. I'm looking for the DM positive to take out the 30 area on the 24-hour time frame. We can see the ADX has managed to actually recover the 40 zone, which is good to see. You don't often see that happening on this chart, well, this particular chart. Let me just draw it in for comparison by going to another chart that's got more more history on it, such as the Bitcoin chart, and saying that you don't often see it recapturing the 40 overall. As you can see, it often breaks down below it, often does. So the fact that we're doing that at the minute with the degree of hidden bullish divergence gives you the sort of the hidden story that the otherwise the man doesn't want you to know. Now there's no point in trading off the back of that and just assuming that everything will go your way because of the things that I've said in today's section of the show. In fact, it would be far better to just manage your risk accordingly, and the way to do that would be to be looking at these sort of clear structural zones and the numbers that I've already pointed out. I don't know, what do you think? Nice one. That's cool. Oh, did you mean, were you talking against Bitcoin the entire okay, Okay, cool. Well, anyway, you know, that's going to give you a good deal of insight when we go over to look at the Bitcoin chart, right? Because what we can see is that there's a plenty of negative type things on the go, but a lot of potential positivity. Why is there a all history of this thing? Let's find a different Bitcoin pairing. Binance got more history, right? Yeah, good one. So what you're seeing here, as you could, is that we're at the top end of things, and yes, you know, you could be calling this like the head and shoulders, right? So you've got this clear resistance, the support line, right? And then you could obviously look at this and say, like, shoulder, head, shoulder, this is it, measure move, yada yada yada, right? But we're not going to get too bogged down with that, because there's also various other ways of looking at this, and one of which is, like, just as you can see, the Gestalt nature of things. If this was just simply to be a symmetrical triangle, what would it look like? So slanting, so the reliability of head and shoulders, which have got a big slant on them, especially the ones where they're slanting against the prior trend, or, you know, slanting with the prior trend, sorry, or what, you know, what, you get the point I'm making, is fraught with danger, right? Because they often translate, of course, into symmetrical triangles. These are the sorts of lessons that realistically, no matter how good a course I could make, I could never actually put all of these lessons in here. So after, you know, once you've learned things, it's always good to kind of continue to make these associations across time, so that you get the so these things get embedded in your head as you're looking at things. Because like the guy that came along earlier on, Cullen Skink or whatever, Cullum, that you know, that people get distracted, and there is this Gestalt nature to charting, okay, that it's easy to get distracted by. So could we move towards the top side thereafter? Well, I mean, you know, this is a 50-50 pattern here, if you want to call it that. And then, of course, just taking this as a rough sort of guideline measuring stick, then you're looking up towards the sort of all the zeros 7. That's a 50%. Well, let's call it a 40% movement up the way, because it wasn't high 7s or 8. So we'll call it a 40 to 50%